This week, I had a client lose almost $30,000 to a scam. The worst part was the person who scammed her was a friend. And that is a very hard conversation to have with your client. So today is another edition of Fraud Friday. It is a Monday. I did notice that. I was traveling visiting family this week, so didn't quite make the Friday cutoff. But let's just go ahead and pretend that this happened a couple days ago. But what I want to talk about today is called affinity fraud, essentially a crime of trust. Uh, but for those of you that don't know me, my name is David Lewis. I'm a certified public accountant and certified fraud examiner, and the owner of High Impact CPA, a full service accounting and tax firm, helping people increase their profits, increase their cash flow, and minimize their tax liability. Now, and for those of you that also don't know, I live in Salt Lake City, Utah. Now, Utah, year over year, according to the FBI, has been the biggest state in the nation that suffers from the affliction of affinity fraud. So, I want to talk a little bit about what affinity fraud is and how you can protect yourself from it. So, we'll dive right in. So, what is affinity fraud in plain language? Well, simply, it's a scam where a promoter leverages membership or a shared identity to sell a fake or misleading investment. And I would even expound upon that definition a little bit to say it's also the risk of going into business with friends and family with whom you trust. It is a fraud of trust. So, how it typically shows up? Well, there's a kind of a quick pattern list that you can watch out for, but essentially what happens is you've got someone that you respect, an insider, a trusted community leader, friends, family, even, where, they're going to come to you and say, I've got this great idea, or I've got this amazing investment that's going to yield massive returns above the market. And please get in now. We need money to get this started. We can guarantee your investment. There's so many things that they can say to get the scam started and pull you into it in a way where at the beginning you're feeling quite good about it. Everything's coming up rosy, which is great. But then as time goes on, whether it be a Ponzi scheme or, different kind of scam, over time the cracks start to show, and you're either going to lose all your money or a significant amount of it as the fraudster makes off, and, you either don't see them again or they're able to convince other people that, you were the problem or something along those lines. But again, a couple quick red flags. You're looking for a respected insider who's going to come to you in either a personal or a group setting. Like, for example, they just slide into your DMs or they invite you to a friends only webinar on this particular investment. They'll lead with a lot of social proof. So again, to build into that trust that they already have. So, for example, everyone here is doing it. You've got a pastor, a coach, a leader who's saying, "I'm only offering this to you or my community." And the other thing they'll do is they'll use complex jargon. They'll say, "Hey, they'll walk down a path of, oh, well, it makes sense because of this," but they really speak in language that you're not going to understand. And that just makes it, one, harder for you to wrap your head around it, obviously, but it actually builds up that implicit level of trust of, oh, I know this person, they're a good person, they must know what they're talking about. So watch out for those. Some other red flags you can look for is, there's pressure or secrecy behind this. They want you to act now, but, don't tell anyone else. Don't have it independently verified by your CPA. Anyone. The economics are too good to be true. If they're offering 100% return on investment month over month or year after year, if some people can beat the market, some innovation can beat the market, but if they're offering you extreme return on investment, probably a good idea to dig a little further. And again, they'll leverage their authority over you or their relationship over you. It all comes down to that trust factor. So what can we do when we're faced with this type of situation? The most important thing is to have a level of skepticism built around you. Always. It's like when you go out and get a contractor, you don't just hire the first one that you see. You get a couple of different quotes. You understand what's being offered, and then you can make an informed decision from there. It's the same thing with your investments. You really need to be doing your due diligence and verifying everything. And so the first most important thing you can do is just pause. Take some time. Really think about it. Do you understand the investment? Do you understand exactly what you're getting into? What your cost up front is going to be? What type of returns you're being promised and when? So take some time and think about it. So number one, pause. Two, start verifying. This is the due diligence process right here. Ask for more information, ask good questions. They should be able to provide you documentation, financial statements, pro formas that are one based in reality. So you should be able to go through all of the information they provide you and understand exactly what you're getting into. And if you don't, that's your sign that you need to ask more or better questions or bring someone else on board that can. And then, yeah, third thing you can do, bring someone independent in to review it. I've looked at tons and tons and tons of pro formas and pitch decks on things, and some of them are great. Some of them have been really legitimate. And a good example is I had a client who was a startup that was raising capital for their business, and they had a really well thought out business plan, and that was realistic. The risk of loss was made well known to any potential investors, and the plan was, steady growth year over year. But the point is, it made sense. And you could go back and you could benchmark other companies that had done sort of the same thing, and you could come up with a realistic expectation for the numbers. So, I mean, that's really the biggest thing I can offer you. Just watch out for people that, you have some implicit trust for. Ask good questions, get a full understanding of what you're investing in, and your risk of loss will go down considerably. Because here's the problem. Once the money's gone, I mean, it's usually gone. So, and then you have to go the route of hiring attorneys, you know, filing police reports and all that fun stuff when an ounce of prevention could have saved a pound of cure, or however the saying goes. Anyway, if you need some help or you're looking at investments where you're not fully understanding them, we would love to come in and help you. So reach out anytime. Again, I'm David Lewis with High Impact CPA, and we will see you in the next one.